Hey investors, welcome back to Science of Stocks. Let me tell you, this was one for the record books. The S&P 500 surged a whopping 23.3%, and the Nasdaq Composite absolutely crushed it with a 28.6% gain. Let's talk about what exactly that looked like. The S&P 500 started out going up 7% in January and February alone and did not give up a single shred of that momentum going forward. It finished out the year up a total of 23.3%, and it came into the year with a dividend yield of 1.5%, that dropped down to 1.22, and now it's rocking a price to earnings ratio of 27.2. Now, the Nasdaq Composite outperformed the S&P 500 yet again, bringing its outperformance to over 400% compared to the standard index, typically referred to as the market. The Nasdaq Composite now has a dividend yield of near 0.6%, a price-to-earnings ratio of 31.8, and a strong track record of growth. Predicting future market returns is not easy. In fact, it stumps many people year over year. Some of my 2025 thoughts at this current point in time are looking at the S&P 500 dividend yield. It is stretched thin. The dividends are a representation of the earnings per share generated by each company and the amount of profits they're sharing with investors. And they are near 25-year lows, which does raise some concerns. Goldman Sachs and JP Morgan are both predicting less than 6% annualized returns for the S&P 500. On the right here, we see charts of the bottom right is the S&P 500 performance for the past 25 years, and on the upper right are the 25 years prior to that. We can see that the past history of these 25 years doesn't look particularly overbought or undersold. Meaning that while there may be near-term corrections in the stock prices, the long-term outlook still sounds reasonable. Overall, I wouldn't be surprised to see some more price appreciation, especially with the Nasdaq Composite beating out the S&P 500 again in 2025. As always, thank you for watching. Stay tuned for more stocks, analysis, and everything else.